Well, Q1FY22 update suggests strong loan growth momentum coming in from HDFC Bank, HDFC Ltd, and to an extent a decent growth coming in from Federal Bank. On the deposit front, we're also seeing a fairly strong momentum, especially on the CASA front. Also, we're seeing that Jefferies has gone ahead and maintained a buy on HDFC Ltd with a target price of rupees 3,300 per share. Firstly, speaking on HDFC Ltd, well, HDFC Ltd has reported that in Q1, the individual loans in the last 12 months amounted to 23,000 odd crore, which is a growth of close to around 26.4%, and loans assigned to HDFC Bank has stood at 5,400 odd crore. The profit from the sale of investments has been lower during the quarter at 263 crore versus 1241 crore in the same quarter last year. But do know that these are lumpy investments and we shouldn't be reading too much into it. The profit on sale of investments includes part stake sale in HDFC Ergo General Insurance worth 209 crore, which brings HDFC Ergo's stake at 49.98%. In fact, it also includes a part stake sale of Good Host Spaces worth 54 crore. Jefferies has stated that they maintain a buy on HDFC Ltd with a target of 3,300 per share. HDFC annual report for FY21 suggests 67% of new stage 3 loans, and besides the stage 3 loans of 2.3%, 0.4% loan were the debt asset swap. Jefferies states the retail approvals rose by close to 10%, led by 9% rise in ticket size, and the rise in equity to assets from 9% to 15% over FY17 to 21 is a drag on core ROE, even as the return on assets has improved. But overall, Jefferies maintains a buy with a target of 3,300 for HDFC Ltd. Speaking for HDFC Bank, well, a very strong update, momentum coming in on the loan book front as well as on the deposit front. The loans has grown close to 14.4%, led by a good growth of 17% on the wholesale book. Commercial and rural banking segment has demonstrated a strong growth of 25% YOY, and it is plus 4% sequentially, and this is one segment which HDFC Bank has been focusing on recently. In fact, the retail book, however, has degrown slightly by 1% sequentially, and the retail disbursements have degrown 30% on a sequential basis, and we need to be watching out more in terms of the bank's commentary on what led to the decline in retail disbursements on a sequential basis. Bank deposits have shown a good momentum of 13.2% YOY. Deposit growth was led by CASA growth of 28.2%, and CASA ratio forms nearly around 45% of the overall deposits. It's down slightly around 1% on a sequential basis. The retail deposits grew well by 3.5% sequentially, but the wholesale deposits are down 10% sequentially. Federal Bank also reported a good growth of 9% on the deposit front and a loan growth of 8% on a YOY basis. The deposit growth for Federal Bank was supported by strong traction on the CASA front. The CASA ratio has improved to 34.8%, and the CASA deposits are up 19%, while the customer deposits are up 10% YOY, and they are forming close to 92% of the total deposits. So yes, overall a fairly strong start, at least in terms of the loan growth for all the three players, and good CASA momentum coming in for both Federal Bank as well as HDFC Bank.